Want to know how to analyze any real estate deal under 5 minutes, whether it's your first investment property or your 100th? I'm going to give you 5 simple steps that will help you analyze without any spreadsheets or complicated formula. Each of these steps can be evaluated in under a minute and will give you a good landscape of your potential investment property. I'm also going to give you some online resources that you can use regardless of where you're investing, as long as it's in the US. Analyzing the property price. Let's start with the listed price. So this is the price that the sellers have determined to be the market value of their property. However, is it in the right ballpark? It's important to take a look at the comparable sales in the neighborhood. So what I like to do is look at the comparable sales, also compare the interior match, and determine a fair market value for the property we're looking at. Estimating rent. I like to use platforms such as Zillow or apartments.com to kind of see what the average rent around that area is generating. Something to know, it's not just rent that we're looking at, but days on market. How many days is this property going to be listed for before we find a potential tenant? If it's sitting on the market for a longer period of time, just know it's going to be more difficult and longer to get a tenant in place. Third, calculating expenses. In order to know if you cash flow, it's important to note your net operating income. So things to note from your expenses. The main expense would be your mortgage if you're financing, along with your property taxes, your homeowner's insurance, potentially HOA, and potentially property management fees if you're choosing to have a property manager. I like using bankrate.com's mortgage calculator. So you'll input the information on the home, such as the purchase price, your interest rate, and it'll give you your monthly payment breakdown. In order to cash flow positive, you'll need your rental income to be higher than your monthly expenses. So on the mortgage calculator, you can input different down payments amount to figure out what down payment amount you need in order to cash flow positive. However, negative cash flow isn't always a bad thing. There are a lot of expenses when you have an investment property that you can write off on your taxable income. There are a lot of expenses that you can write off on your taxable income, which in the long run might be a net positive. The general rule is that you can write off your mortgage interest, your property taxes, and any sort of operating expenses on your income. However, it's best to get with a tax professional to really realize what your max tax deductions could be. Factoring in appreciation. Real estate investing is a long game. Unfortunately, there isn't a get-rich shortcut. I think a lot of investors should really look at appreciation, how that could add potential to a deal. Over time, property values often increase. So if you're picking an investment property in an up-and-coming area, you'll get that appreciation down the line when you're ready to sell. For appreciation maps, I really like to use Reventure.app. It shows you a year-over-year appreciation all over the US, and I think it's a great website and resource for real estate investors. So there you have it, 5 simple steps to help you analyze your next deal. I hope these basic calculations help you analyze your next deal. I'm Shawna, your investor specialist. If you're thinking about buying, selling, or investing in Las Vegas, I love to help. You can find all my contact information at thethomasgrouplv.com, and I'll be extension 9. I'll see you in the next video.